I must give you a disclaimer. The next strategy is what I consider really risky, but at the same time, you can make a lot of money. So in this particular trade, I made almost $10,000. And as you saw earlier from the recording, I was done by 9:48 on this particular trade. So if you are a part-time trader or those who are just looking for a quick win so you can go to work, this will be a perfect strategy. Welcome back to another Humble Trader video. This year has been a fruitful year for me so far, as I'm enjoying making new videos and exploring new styles to teach you risk management, trader psychology, and even more trading strategies. But you guys always wanted more. Okay, I got it. The highly requested live trading video lessons are back. For those of you who are new to my channel, my name is Shay, aka Humble Trader, and this is live trading series where you can learn from real life executions of my trading strategies and see both the wins as well as the losses. Today, I'm gonna use some of my recent trades to show you guys how you can possibly trade within the first 20-30 minutes after the market opens and call it a day and go to your dreadful job. Okay, sorry, I shouldn't have assumed that your job is dreadful. Maybe it was just me who had a shitty 9 to 7 job. I know a lot of my viewers are part-time traders who are keeping their full-time job, so shout out to you guys for the hustle. This video will be especially valuable for traders who have limited time to trade. And even if you're not a part-time trader, the strategies I will be teaching today will help you better understand how to profit from the price action during the first hour of the day when the markets are the most volatile. In this video, you're going to learn my thesis and trade planning process, breakdown of my scalping strategies, a step-by-step demo of technical analysis and price action, and finally, my planning for risk-reward and risk management. If that sounds good to you, don't forget to smash the like button and feel free to leave any questions for me in the comment section below. Now let's get started. So the first trade I want to share with you guys is CVNA Carvana gap up short selling strategy. This is a pretty simple trading setup for day traders and scalpers who are looking to trade just the opening hours. And as you'll see later in the live trading recording that I have, I made a little over $1,100 on this ticker on the short side within about 20-30 minutes after the open. So let's take a look on this particular day on Carvana over here. This day we're talking about, as you can see, the stock gapped up huge overnight from prior day's close to about $8 all the way to pre-market highs of 1070s and hit like a little peak, lower highs 1020s pre-market, and since then at the open just sold off. So we're looking for that little gap up to short into in this particular stock. And as you probably know already, Carvana is also considered one of the many meme stocks that ran in 2021 and 2022. And the thing with meme stock is that every time, as you can see on the daily chart, usually these stocks, whether it's AMC, BBBY, it's been long-term downtrending. I mean, CVNA used to be a $300 stock, and since then it's drifted off and sold off all the way to like $4. And then you can see, has a lot of failed spikes in the past before, and every time it gaps up, especially to a key daily resistance, which it did on this particular day we're looking at, it gapped up to like 10, 40, resistance, sold off, and over here, this rough area, 980s, that's also the daily resistance. So whenever we have these meme stocks with like a long-term bag holder chart that you just saw, gapping up to key daily resistance, then a lot of times I'm more short bias on the stock. And it'll work really well for a simple scalping strategy on the short side. So you can see this is pre-market level 980s over here, this little pre-market support. That's what I'm going to look for when the stock breaks down, and that's my trigger for entry. And if this is the entry on the short side, then I'm risking about here, pre-market highs area, 1030s. So we're talking about 40-50 cents of risk. And for the downside, you can see on the downside I have all these lines. But downside, obviously, at the time, we don't know where the stock is gonna go. But if we're looking at a daily chart, the downside, I wanna look for the next level support down on the daily chart. So you have a small support around 930s. Over here, 930, 950s right here. And then you have a little bit more support down here on 860s range. So those will be your price targets. So if that's the entry, downside you have here 40 cents. So that'll be 1-to-1 risk reward. But if you're looking for even more, then you have downside to like 860s. Or like, there's probably a small level around 880s mark. So here are the 3 key criteria for this scalping short strategy. Number 1, it needs to have a past price action on the daily chart of a long-term downtrending chart. Number 2, you need to see a pre-market gap up. And number 3, this needs to be a stock that's gapping up on air, basically gapping up on nothing. So you can see it's 9:31 a.m. right here. So market just opened about 1 minute in. This Carvana trade, you can see I'm already in 1,000 shares. So it happened super fast after the open. You can see the breakdown of this level right here that we talked about pre-market, which is the 980s area. It's already broken down. So that's why I really hurried up and got in 1,000 shares on the short side. Thankfully, Carvana is an easy to borrow stock. So it didn't cost me anything to locate those stocks short. And as you can see, immediately after the open, it got halted to the downside. So I'm stock short with 1,000 shares, which is a starter for me. The idea is to keep on adding into it after it confirmed the breakdown of 980s pre-market support. These volatility holds happen whenever a stock increases or decreases by 10% within a 5-minute time period. Okay, I fast forwarded a little bit, it's on hold. Really quick, you can see unhalted. You can see it halted down, right? It halted at about 980. It opened at 950. So you have about 30 cents air gap. So this is usually what happens after the halt. You can see on the top over here, GME, even though I'm not trading it, that's also a lot of meme stocks were gapping up in sympathy. You can see this thing is also halting to the downside as well, but I wasn't trading GME, GameStop. So you can see Carvana, usually after the halt, whenever you have a gap down, you're gonna get a pop to retest that VWAP area, and that's kind of what I'm looking for, a bounce to short into. And a critical mistake that a lot of new traders make is that they don't look for the little bounce to short, and they'll hit the bid at the very bottom at like 940 or 950 down there. So for me, I want to start adding slowly into the little bounces. You can see I added a little bit, 1,000 shares at around 960s. So that gave me an average of 970 right now on 2,000 shares. You can see that little test of VWAP right now. I'm down about 3 cents. No problem. So I'm looking at whether we're gonna reclaim that VWAP, in which in this case the risk is now moved down. So I'm no longer risking the 1030 like we talked about earlier. Since I started adding into it, I'm moving my risk down. I'm moving it to around VWAP area. So that will be around 980s. So at this point, I'm risking about 10 cents, 10-50 cents with slippage in mind. So you can see you have a little pop to test that VWAP area. That's what the yellow line that you see on screen right now. You can see the stock is staying pretty heavy. That little pop barely even try to reclaim that VWAP area. So really, really weak. You have some decent volume on Carvana. You're trading 7.4 million. So still holding my 2,000 shares short. So at any given point, I'm usually trading at least 2 stocks at the same time. But on the top over here, you can see 2-minute chart on Carvana. You tested at 980s area, right? I was saying like if it reclaimed that VWAP, I'm gonna have to stop out. But looks like you're failing that VWAP, at least right now. We're back down to 970s, that's my average. I'm still holding. I think the idea is that I wanna add at least a couple more times. You can see I'm adding the confirmation of weakness, added about only 200 shares. I was trying to add 500 shares, but not sure why I canceled it. So I only got filled 200 shares at this is 970s, and you can see because I'm adding on the confirmation of a breakdown. I'm not adding on strength, so that's the difference here. I'm adding once the stock rejects that 980s level we talked about and rejecting VWAP. And as you can see on the top window here, Carvana is staying weak. We're back down to 950s. So I'm up about 20 cents per share. But I think at the minimum, I was looking for $9. Remember, at this point, I'm risking 15 cents around that. For downside, if we hold it down all the way down to $9, then I can potentially make about 70 cents. So that's good risk reward. You can see we're testing the lower day, which is 940s. There's a really, really small support here from pre-market 940s. So I'm expecting some small bounce, maybe like a dead cat bounce. So I think I'm gonna start covering at least like a very, very small piece into that. And that will give me about 30 cents per share if I cover it there. So you can see I'm just covering small, 200 shares.
No, I didn't cover.
So fast forward a little bit, you can see, oh, I actually did not cover. I actually added even more, 940s. Yeah, because the stock was so weak. You can see even on that trying to add, I was trying to get filled 500 shares, couldn't get filled. I only got filled about 100 shares. So I'm adding to a downside on the breakdown of that 940s area. Because the stock was extremely weak, as shown on the tape. So you can see the stock can barely even bounce. I'm trying to not to like chase the weakness, to short into the weakness, but so I'm trying to wait for the bounce. But sometimes you just gotta accept the stock is so weak that it won't bounce. So that's why I only have about 2,300 shares short, now with an average about 968. So back to Carvana, you can see now we are dripping lower. The stock is all the way down to 920s. Really, really weak, right? There's barely any bounce. And I finally covered some. I covered about 500 shares, I believe. Yeah, 500 shares. So I'm down to 1,800 shares on the short side from 2,300. So I covered some, locked in about $200. But I want to see how much longer I can hold on to the remainder of 1,800 shares short. And keep in mind, if you look at the bottom right-hand corner, the little clock over here, market clock, it's only 9:44. So it's only 15 minutes after markets opened. But all of this planning, once again, is done pre-market. You can see here the stock is extremely weak. You can barely get any uptick. The bids are just getting hammered down. There's no one buying the stock. And this is very typical of the meme stocks and any stocks that have a long-term bag holder chart that you saw earlier. So this is the reason that having a bag holder chart is one of the most important key criteria for this scalping short strategy. Whether you're actually scalping for the quick move or trying to hold on to at least 20, 30 minutes like I did, doesn't matter. It's important to look at a daily chart. So we're back down to 915. I think you're gonna see me trying to cover up the rest of the position, even though I should have held on to a lot longer. You can see I'm trying to cover some at 916 over here. The lows of the day at the time was I think it printed 909 earlier. I covered all of it. Oh wow, I covered all of it. So I covered all of it at 916, locking in $1,100. So coming back to the trading view charts now, we're now looking at 2 minutes. I believe that was the time frame I was using to execute. You can see I entered here 980s, which you saw earlier, and I covered pretty much everything around 915 here. And you can see the stock ended up going a little bit lower. Okay, not all the way to 860. That made me feel a little better. But to 890, 880. So I left about, somebody do the math, 30 cents on the table, which is okay. But we're trying to capture the meat of the move from the open, failing that key daily and pre-market support, going short, risking the pre-market highs, 30 cents, looking for a downside move all the way to 915 or 890s. If you want to learn more about my gap up and gap down trading strategy, then make sure to watch the strategy video on my channel. Moving on to the second kind of scalping strategy that you should definitely learn. This case is going to be on the long side. This time around, I'm going to demonstrate another live trading example on Tesla, your favorite stock. So in contrast to a Carvana trade on the short side, we're not looking at a large cap stock that's gapping down during pre-market. So as you can see over here on this day, the day before, Tesla had a really strong day. We're talking about a move from 197 all the way to 207. So that's a really strong close. Over here, the white area is the regular trading hours, and the yellow part on trading view, this is the extended hours trading. So you can see the next day, this thing actually gapped all the way down from 207s down to 202s, and then pre-market went to a low of $200. We're talking about a 7-point gap down overnight. So we're about to dive into the key criteria for the scalping strategy once again. I hope you guys have been taking notes and learning from the essence of these live trades. Before we move on to talk about the criteria and the details of the strategy, if you haven't done so already, please remember to drop a like at the bottom of the video. And remember to subscribe if you want to see more videos like these in the future. Thank you very much. Now let's move on to the next strategy. So here are the 4 key criteria on the long scalping strategy on Tesla stock. So number 1, it needs to be a large cap stock. This strategy does not work for small caps or micro floats or any of those like runners. Like it just doesn't work. It works best for large cap stocks like Tesla, Nvidia, Apple, AMD. Number 2, the stock needs to have really strong breakout the previous day. So that's why I pointed out the daily chart for Tesla stock earlier. As you can see on the daily chart, right, this day, this is the previous day, you had a huge breakout. Right? So that's why the second day, the gap down, it gives you a good opportunity to bounce the stock. We're not looking for a big move. Once again, we're looking for a simple bounce strategy that you can trade for 15, 30 minutes and be done and go to work or do whatever else you want. The third criteria is that you need a pre-market gap down, which is pretty obvious. Once again, you had a gap down move from 207 prior day's close to $200 pre-market. So that's what we call a gap down. And last but not least, the stock needs to be gapping down on really, really high volume. On this particular day, I don't have my scanner up, but Tesla, whenever it gaps up or gaps down, it trades really high volume, over 1 million shares pre-market. So that's what you want to see. If the stock was gapping down on like 20,000 shares, not good enough. Remember, you're not here to be Warren Buffett and invest in the stock, okay? We're talking about trading here. All we're looking for is the profits from a short-term price action. Hit it and leave it. Quote me in the comment section if you agree. Now let's plan for our entries on the long side, the profit target, as well as the risk now. So on Tesla stock, you always want to start from the daily chart because it's a stock that has a big range. So that's why I have $200 here. You can see on the daily chart, that's a key level right here. The stock previously tested once, twice over here, and 3 times that held up a support on this area in February. So that's why $200 is going to be key. But remember, the stock is not, you should not just use one single entry point. It needs to be a zone, right? So that's why you look at the previous breakout day, the day before. If you look at it, before it hit $200, it consolidated right here. Broke out to highs, 199s, consolidated, dipped a little bit to that 199.10s area. And then that's when it like dipped, trapped, and then broke out to new highs. So that's the reason this is going to be an important level that also lines up on the daily chart. This zone here, we're just going to call it 199. This zone on the daily chart is going to be the key level you're looking for entries on bouncing the stock on this overnight gap down. So this is my entry area, 199, 200, right? I know this is big range, but again, Tesla, big range stock. You need to give it at least $1 room. So if you're planning to long 200s, you need to be able to risk 199 and below, right? And if you're long 199s, then you probably can have your risk be a little bit tighter at 50 cents, 70s or 198.50s. Now for the upside, I will say I was a little bit more aggressive. You're gonna see in the live trading recording later that I had originally aimed for 204s on the bounce. So I was looking for 4-point bounce on the upside. That's very possible with a stock like Tesla. However, you can see you have another small level here around 203s. 203s, 202s, 204s. Those are the price targets that I'm aiming for. Remember, we're talking about a quick scalp. So the best you're gonna get is 1 to 2 risk reward. And if it really does go to 204s, then that's probably, if you do the math, that's 1 to 3, 1 to 4 risk reward. On this particular day, on the gap down to $200, I got in a starter at, I think about 200 shares starter at, this is like what, 199.80s, and then added after reclaim of $200 because we talked about this. $200, that's gonna be a key level, and this is only a minute after the market open, so it happened really, really quick, right? Remember, if you're trading this for a scalp for $1, $2, you gotta be in and out, hit it and leave it. So that's why things happen really fast. If you don't have a fast broker platform like this one, which is Dash Trader Pro, you might not be able to execute this. Okay, so at the open, you can see I got in $200, so 200 entry, 200, this is like what, 230s maybe? So I had 1,000 shares averaging $200.30. You can see the stock is already bouncing. We bounced about 1 point now, testing VWAP. Now, if I was more aggressive, you can see down here, 230, that's my average. Now, if I was more aggressive, I actually add over this bounce, but I don't think I was as aggressive as I should be because I want to be patient, looking for the big move towards that 204s area, which is your pre-market highs on the day. You can see, we tested a VWAP, rejected a little bit, similar to Carvana earlier, but I'm still holding. Do not panic. At a decent average, about $200.30. At this point, I would be risking just below $200. So that'll be 40 cents risk. So I can potentially lose $400 on this trade. Let's see. We're testing that 201s. You can see I'm getting ready to add, trying to add into Tesla. I want to add slowly, 300 shares, because after all, it's a really volatile stock. But we actually remain strong. You can see we're testing over 201s once again and testing that VWAP. And usually, same idea as on the short side. On the short, I want to short once the stock is below VWAP. If the stock is over VWAP, I want to add into it on the long side. You can see I wasn't certain, so I sold a little bit too fast. I sold 300 shares at 201s-ish. So I locked in about a little bit over $200, not a lot. But I want to see if the stock stays strong, then I'll add back into it. Or to sell into the pop towards that 202, 204s area. I definitely was playing a little bit safe on this particular day though. Because I believe at the time market was kind of choppy. So I wasn't quite sure if I should stick with it or just get out. You can see I went red for a little bit and when it went back down to my average, but nothing to be too concerned about right now. And I'm trading on the 5-minute chart for a stock like Tesla. This is very different than Carvana because Tesla is a big cap, big range. You can see that popped way too quick. Over 201.88. So I'm up about, decent. So I'm trying to sell just a little bit to lock it in, 201.80s. But once again, I am aiming for that 204s. If we don't get it, that's fine. But I want to make sure I'm locking in profit along the way. And that's a little bit over $1 move. So risking 30 cents to make $1, that's decent risk reward. I know it didn't go according to plan where I sold everything at 204s, but you just gotta be cautious. Remember, hit it and leave it. There were a couple of things I'm concerned about looking at the market, and now I'm switching on the 2-minute time frame just to look at the price action a little bit closer to determine whether this is just a little pullback or are we actually in like a huge downtrend retest and we're failing that. And I believe I'm gonna get out of the position really quick. 202s now. I think I just exited everything at 202. The remainder 500 shares and locking in about $1,400. And you can see back on the trading view charts, that was a good call to sell everything around 202s. You can see I entered here $200, right? Even after the ad, my average about 230 points, and I sold everything around 202. I didn't get the top of 202.70s, but I got out around this area as you saw earlier, even though my ultimate price target was 204s. But it ended up being a good sell because after that, this thing just rejected and then stayed below VWAP on the 5-minute chart over here and really just sold off all the way down to 192. So I'm really glad I didn't hold on for that, $2 more. And that's why I keep on repeating, hit it and leave it. Do not outstay your welcome. If you're looking to do these kind of scalping strategy, whether it's on the long side like Tesla or short like Carvana. So overall, I'm pretty happy with this Tesla trade. As you saw in the recording earlier, I was done once again in about 15 minutes. Another question I see a lot in my comment section is, do you trade during pre-market hours? The answer to this question is yes, sometimes. Very, very selective times. I will enter a trade if I see a pre-market mover, but it must fulfill my setup criteria. And that goes to the next strategy we're going to talk about. I must give you a disclaimer. The next strategy is what I consider really risky, but at the same time, you can make a lot of money. So in this particular trade, I made almost $10,000. So the stock we're looking at is FCNCA. I know, long ticker. First Citizens Bank. Now they're known for the bank who bought up Silicon Valley Bank's debt. And that's the reason the stock gapped up from like $600, like below $600 prior to its close, all the way to $900. So we're talking about a $300 gap up overnight. And that's the reason, once again, I just gotta disclaim this. This is a very risky strategy. And if you're watching this, make sure you have risk management intact. So this particular strategy is pretty similar to what you saw for Carvana earlier. So if you paid attention earlier, you remember the key criteria. First of all, you want to see a downtrending daily chart. In this case, you can see downtrending daily chart. I mean, this thing was part of the banking crisis that started with Silicon Valley Bank. You can see the stock sold off from $800 all the way down to $500. And you can see a huge pre-market gap up as usual. Now, most importantly, you want to note that ideally, to trade this particular setup, like we talked about for Carvana, you don't want any meaningful news for the stock. However, on this particular day, yes, you have the huge gap up. Yes, you have a downtrending daily chart. But guess what? You have extremely positive news and, huge news headline. They're going to buy Silicon Valley Bank's debt. And that's what I mean by it's a very risky strategy. Because whenever you're shorting these stocks that have news, you need to know when that's it. Like you cannot hold on to the fade all the way down to $700. No, I'd be dreaming. You gotta be able to just get out at the consolidation before this reversal. Okay? So I'm gonna show you how I did that later on. So here's the recording. You can see pre-market, I already had a short scalp from 915 down to this is like what? 880. And I only had 100 shares. Do the math. I only had 100 shares. So this is the kind of range you get. We're talking about like a $20 range. So you don't want to oversize for these things. There's a couple of important lessons here. Besides what we just talked about, that the stock has catalysts, so you want to be able to just get in and get out and do not outstay your welcome. The second thing is that if you were trading pre-market, which I was, now the market's open, but I was from the shorts 915 down to 880, we're talking about like a 30-point drop actually. The volume is going to be very, very low on the stock. So you don't want to oversize. Using 1,000 shares at one time won't work unless you're building it slowly. 200 shares here, 200, 300. You have to slowly build it up. This market is already open and it's only trading 280,000 shares. So that's what I mean by this is extremely risky. Okay, just because you're watching this doesn't mean this is the right trade for you. Okay, I'm telling you this just so you don't burn yourself. If you do decide to trade the strategy, size down and make sure you maybe start with paper trading first. So that was the pre-market trade. A very simple higher-day shorts 915 risking 940s. We're talking about a $20, $30 risk per share and then downside to cover it into the open. I just didn't want to hold it into the open. So that's why I just covered everything here at 880s. And now once the market's open, I'm stocking for my next short entries here. But if all you do is trade pre-market, this strategy will work quite well. Maybe on some different stocks that have more volume and less spreads and doesn't have such a positive news. So at the open, you can see this thing just sold off from opening of like 870, went all the way down to 850. So that's another 20 points from where I covered. Volume is staying low, but you can see I'm trying to fill 500 shares short at 848. So I got some, like only 200 shares, gotta be careful. Once again, volume is really low. We're only trading 280,000 shares. But whenever I get partial fills, I depend. Oh, I got full fill at 848. Otherwise, I would cancel it, okay? But you can see this thing, the spread, we're talking about $3 spread. So that's another reason you want to size down, okay? But for me, 500 shares on this, it's manageable. So I'm realized red 3,000, but like if you look at the spread, I'm an average at 848. I'm in between the spread. The bid is 846 and the ask is 850. So that's why, these like higher spread stocks, you gotta be able to have the heart for it, okay? But for me, this was okay. And I don't really have any plans on adding into anymore. I think 500 shares on this stock with such a big range, we're talking about $20, $30. That's all I wanted, okay? So I'm looking for the first line, which is that 830s area, I believe. That's gonna be my first price target because that's the daily level here on the daily chart. So that's what I'm looking for. You can see the stock is trying to hold up at 830s area. So I'm watching this to see if we keep on getting a lot of bids around this area, then I'm gonna cover everything for either a small win or a small loss. So fast forward a little bit here, you can see the stock is still consolidating around that VWAP area. On a stock like this, I definitely use a 5-minute chart. And once again, I'm looking for that breakdown to 830s. That's all I'm looking for. I'm up about $6 per share. But once again, it's deceiving because of the spreads. But I'm looking for a drop and I'm trying to cover and get out. But I believe I ended up breaking some rules here and like outstayed for way too long. But I really wish I covered some into this 835s. That's gonna be the low of the day and it's testing that pre-market support area. I really wish I covered into this. But you're gonna see I made some mistake here. Like even right now it's printing 834. 834, 831, that's the bids. And I'm up a decent amount, but I still didn't cover. I really wish I had because you're gonna see I get trapped later on. So I really should have just covered everything. I really wish I did, but I didn't. If I just cover everything into 832s, that'll already be like a 10 grand day and I'll be done. But no, I definitely outside. You can see I'm trying to cover 200 shares at 830, but I'm not gonna get it because it's holding that 830 support really, really well. And the spreads on this is just nasty. So that's the reason I said and mentioned earlier, this is a risky trade because of the volume and the spreads and the fact that it has positive news. Nope, you can see right away we pop back up. This is what happens when you're trading low volume stocks. I don't even have that many share sizes, 500 shares. That's enough of a fluctuation between when you saw earlier 5 grand and now negative $500. You can see on this little pullback here, I finally covered some. So I covered 200 shares at 841, I think, or 840. I'm glad I covered some. I was like nervous, not gonna lie. So at this given point, the worst that can happen is break even. If we skip up through VWAP and I'll get stopped out and I'll probably give back everything. But at least I wouldn't lose a lot of money. So this is what we call like adjusting your risk as the trade goes on. And of course, according to price action as well. So fast forward here, almost 10 o'clock, the volume really dropped a lot. So you can see that's why I'm trying to cover now. So The stock was already low volume to begin with. But whenever you see on 2-minute or 5-minute chart, this thing, the volume, you can see down here, drops below 10K. That's when you definitely want to consider just getting out. So that's what I'm trying to do. Trying to get out in small pieces. 100 shares here, 100 shares there. I want to get out before the huge squeeze. Not saying all the low volume traded stocks will squeeze. I'm not saying that. But then it becomes a 50-50 event at this point. And I don't want to sit through low volume consolidation. If the consolidation was higher volume, I would be okay sitting through that because you can read into the price action a lot better. When there's no volume and the price just kind of teeters around the support area that looks like it's going to break down, but it just won't. And there's always like an underlying bid around 830s, 831s. You want to be cautious, especially if you're short. So that's why I want to get out. So you can see I finally got out at 832 area. I covered another 100 shares. Now I have the remainder 200 shares. Even like rewatching this recording is like making me nervous. I'm like, just get out, please, just get out. Yeah, because the bid's dropping a little bit more. 826. I think 826.50. Wow. Risky, once again, risky trade. Don't do it if you're a beginner. Just paper trade this, okay, on small size. See if you can actually sit through the consolidation on small sizes. Even just 10 shares, this will be like a difference of like a couple $100 on each skip, right? Oh, I got filled another 100 shares, so locked in $8,000 at 827. Now I just have the remainder 100 shares. I want to see where it goes, I guess. Oh, no, I'm trying to get out. Yeah, I think it was a good idea to just try to get out. 827 was the lowest point that I got on this. You can see it's starting to like bounce a little bit back to like 830s, back to that previous support area. You can see on the 5-minute chart, on the 5-minute, that's why I keep on switching between 2-minute and 5-minute. On the 5-minute, volume is starting to come in as a bigger picture, right? And then, you're back at 835, so no, I want to get out. They're filling a lot of shares down there at 835, 834. Earlier, the print, 827, the volume was so low. So at this point, I think I just want to get out. On the 5-minute chart, it looks like it's consolidated. Okay, I got out everything at 836, I believe. So locked in $9,400. So this is really a 1-to-1 risk reward. So it's not the best trade. So that's why it is also risky. But you can see if you are cautious, like I was, talking through the consolidation stage while I covered everything, instead of waiting for another drop to 800, then, if you're able to hit it and leave it, like we just keep on saying throughout this video, you can still make some decent profit. And I closed all the trades by 10 o'clock. So I got out here 10 o'clock. So this is a 30-minute trade to make, we talked about $9,400. So here are the key takeaways from this strategy in this lesson. A very, very risky trade. Once again, pre-market short and also an overnight gap up, scalping on the short side on this strategy. Number 1, you must be very cautious if you are shorting pre-market on a very low volume stock, such as this one. You must size down, look for the spread, see if you can even handle that. If not, size down 1/10 of your regular share sizes. Number 2, be cautious if there is actually positive news for the stock. I mean, we're talking about a $300 overnight gap up. There was news. So if you're shorting this, be cautious. If you're long, right, then that's probably a good time to look for reversal on this. Not saying to long the huge gap up, but you want to wait for the reversal midday. And last but not least, once again, as we keep on repeating throughout the video, hit it and leave it, okay? Don't outstay your welcome. You need to watch when the price action changes, especially during the low volume consolidation time you saw, and just cover everything up. You're not gonna make, the most money you could, but you need to be able to get out and protect your profit or break even stop on the name. If you are a beginner trader, the first two scalping strategy on the short side and on the long side are probably more suitable for you. The third strategy on pre-market trading and short selling huge overnight gap up like this, I would only recommend that for more experienced traders. We talked a lot about price action in this video, and that's something you definitely need to master in order to trade all three of these strategies successfully. So you should check out this free crash course on price action over here in my video, and I'll see you over there. And if you want to learn directly from me and the rest of my trading coaches, then you should check out the Humble Trader community down below. If you learned from the strategy, then make sure to drop a like and leave any questions for me down below. I'll do my best to answer them. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time.